Hey, welcome to Satisfy Personal Finance. So we're going to talk about what should normal people do when markets go down the way they have in the past week or so. By normal people, I mean working people like you and I who work and then bring an income, and then we invest some of our money every month into the market. Or maybe even people who have not started investing. These are what I mean by normal people, right? Not people who trade on a daily basis. How should normal people react to the news and what should we do from here? I think I have a few ideas on what I'm going to do, and you can choose to follow me or not. Again, do your own due diligence, right? This is not personal financial advice. But my perspective is, if you were to put yourself in the shoes of a buyer and seller of stocks, which category of people do you fall under? Are you a buyer or are you a seller? When you're buying something and there's a sale going on, should you be happy or sad about the news? Obviously, you should be happy because now you can buy more or save money on what you buy. Now, if you're a working adult like me and years away from retirement, then I say that we both fall very clearly under the buyer category of people because we are still in a stage where we are buying stocks and increasing our portfolio. So when it comes to being a buyer, are discounts good or bad? I think that should answer your question on how we should react to the news. When markets go down, it's actually good news for buyers like us. As people with neither the time nor expertise to trade daily and earn a profit out of it, and I must say that very few people really have this ability, our best strategy is to dollar cost average into a diversified and sound portfolio, because even God can't beat dollar cost averaging. And the best investors are actually dead investors who do nothing special about their investments. So we just have to be very passive about it because we simply have no time outside of our day jobs to bother about such things. And we might not have the interest nor the knowledge to really trade and buy, sell and turn a profit out of it. In fact, I think that really a lot of people lack this ability. Just look at how many people got burnt by the stock market and the crypto market in the recent week or so. So what should you do now that markets are down? Well, you can just continue to dollar cost average into the market. And if you have not started investing, now is a very good time for you to start. Now, you can also choose to maybe invest a little bit more, as I have, rather than your usual monthly amount, because markets do look quite attractive right now. And if they drop further, I would just put it a little bit more money. And I think over the long run, you will see that market trends upwards and you will probably still turn a profit at the end of the day. But beyond just this market downturn, I think that there are three things that you can do for the next one as well as the one after the next. So the first one, I think, is that you should build up your financial discipline. And although this sounds very difficult, I think it might be the easiest thing you ever do, because discipline can be as easy as just setting up a regular investing plan that automatically invests your money for you. And automatic part of it is very important, because if you leave it to ad hoc, when you feel like it, chances are you will miss one time, two times, and then you eventually just keep on not investing due to emotion or pure laziness. Now, you must make sure that you dollar cost average into something sensible and diversified. But please do not buy ILP or savings plan, even though the agent will tell you it is dollar cost averaging, because those are not very good products. Okay, you can refer to one of the older videos I've done. I've said multiple times, do not buy ILP, do not buy savings plan. Even myself, whom I consider more financially prudent than the average Joe, I realized that when I invest automatically, my portfolio grows on its own. And when I try to do it ad hoc, I realize that I let emotion take the better on me. I tend to try to do it in a very discretionary manner. And then after a while, it becomes so haphazard that I forget about it or I don't resume that portfolio. I will share some ideas on what you can automatically invest in and products that help make that easier for you. So subscribe to my Telegram if you want to be notified about such things. Building up your financial discipline also means that you need to cut down on your spending and increase the amount that you set aside for savings as well as investing. And having an automatic investment plan actually takes away money from your salary before you get to touch it. So I think that will also help you build your financial discipline. So it's the easiest thing for you to do. Just go and set up an automatic investment plan. Start with something small but still significant enough, and then over time you increase it slowly. Once you get used to the fact that a few $100s are deducted from your salary automatically every month, you won't feel it, and eventually it will grow and grow and grow. Just look at your CPF deductions as well as your CPF account right now. Now make sure you help me leave a like on this video and make sure that you claim your free share by signing up for the trading apps listed in my comments box below. And the second thing that I think you should do is to build up a boring investment portfolio as your main investment portfolio. You can still have cryptocurrency as a side thing, as something speculative and fun to do, but your main bulk of your savings and investments should be in as boring a thing as possible, like ETFs, stock indices, etc. The reason why I'm asking you to take a more conservative approach to your investment is because I feel that people who take risks take it because they are behind and they need to get ahead. Let's say you're ahead of a board game, I don't know, Risk, since we're talking about Risk, and you have conquered Asia, you are comfortably ahead, and you have fortified your borders such that your opponents cannot possibly win you. What are you going to do? Are you going to stall until the game ends and you win the game? Or are you going to take risk and try to conquer more territory? Now, my view is that if you're ahead, you don't need to take that much risk. And if you're behind, yeah, maybe you need to take more risk and play to win rather than avoid losing. Now, let me give you an example. You are now gainfully employed. Your finances not the best, but you're okay and comfortable. Would you join the Squid Game? Probably not. But if you're in debt and creditors are coming after your family, loan sharks are coming after your life, and your house is going to be repossessed, would you join the Squid Game in hopes of trying to get the grand prize? Yeah, so that's how I feel risk works. If you are comfortable and ahead, you don't need to take extra risk. But if you are really in dire straits, then perhaps you need to do something to change your fortunes. Now, having said that, and you are in a desperate situation, please don't say, oh, Seth said I should go and invest everything into cryptocurrency. Do at your own risk. And this might be a rather controversial opinion, but I think that if you're a Singaporean adult in Singapore and you're earning about mean or median salary, you should be quite comfortably on track for retirement and things like buying your own place, etc. So is there really a need for you to invest in very speculative assets like cryptocurrency? I don't think so. Now, I'm not saying that cryptocurrency will fail. All I'm saying is that I can afford to miss this boat because I'm already comfortably on track for my retirement just by investing in very traditional assets. And I think I can speak with a little bit of experience because I was earning $1,000 per month and then I decided to start a business, something that I would probably not do if I were earning 5 to 10k at that point of time. Thankfully, it paid off for me and I'm now in a rather comfortable position. Now, not earning big bucks, mind you, but probably what some of my peers are earning. So I'm okay and I don't need to take additional risk to maintain a comfortable lifestyle in Singapore. Now, some of the more boring things you can do with your money is to invest in S&P 500, that's a very common index, or choose one of the robo-advisors, pick something with a sensible fee structure, and then go for one of their recommended funds. I intend to write more about this, so as usual, subscribe to my Telegram group. And I have something in the works that's quite compelling, but I can't review it right now. So again, you want to be notified about that, subscribe to my Telegram group. On the flip side, please do not be one of those super conservative people who only put money into bank deposits and worse, insurance savings products, because those are very low yielding and in real value after inflation, you might be losing money. So by not taking any risk at all, you are actually actualizing a financial loss because your money is eaten away by inflation. Think of all the businesses and the economies in the world which are trying to expand and grow, and over the years they really do, and you're missing out on all the returns because you are scared of taking a little bit of volatility. Right? We have been through market cycles like this before. Markets go down, markets recover, markets go down again, but there is an upward trend. So if you're one of those very risk-averse people, okay, it's time to come to the middle ground. And if you are those very have fun staying poor crypto dudes, okay, let's bring it down to a more prudent and reasonable middle ground. Now, the third and I think also very important thing for you to do is to build up your income. Now, if you don't have a good amount of income, I don't care if you're earning 10 times or 20 times your capital. If your capital is just $1,000, how much can you earn? Alright, maybe $20,000, and let's say you can consistently 10 times, okay, fine, then you win. But for most of us, I think our income is actually the thing that will allow us to gain enough resources to retire on. Now, without a good income, where are you going to get enough money to invest anyway? Right, your salary is like your ammunition that allows you to deploy resources into markets like this when they're depressed and reap the returns as the market bounce back up later. So you really need to find ways to increase your income, and that is very dependent on your particular situation and skill set that you might have. Number one way, of course, is to keep slogging away at your main job and hope that you get promotions and increment. Then, of course, there are side hustles, right? Like tuition, signing up credit cards and trading apps to get all the sign up goodies, hint, hint. Or like start something online, it can be online business or a blog or YouTube channel like I have done, right? All these are now earning me money, which I have never thought would have earned me money when I first started them. There are things like Fiverr, Etsy, and even on Carousel, I see people selling their services to help people do their assignments. So yeah, there's really 101 things you can do to increase your income. And even if it's like $100 or $200 a month, see how much money this can compound to over 10 or 20 years if you invest it. So in conclusion, there are just 4 things I want you to take away from this video. 1, don't be afraid of markets dropping. It should be celebrated as something good, unless of course your assets are never going to recover. And the next 3 things will be to build up your financial discipline, build up your boring investment portfolio, and build up your income. And I think that once you settle all these 3, you'll be on a very comfortable track towards retirement. Right, so if you like my content, drop me a like, right? Subscribe to my Telegram group for more content and great deals, and I'll see you next video.